Hello and welcome to Business Incorporated live on Channels Television. Well, I see it's majorly mixed sentiment in the global markets, but here are the top stories right now. Nigerian stocks are picking up right where they left off in 2025. The NGX is rallying again in the new year, but is this the start of another big bull run? We'll see in Kenya, they've thrown open their sugar market to duty-free imports after 24 years of protection. Co-op Bank Tanzania goes digital, unveiling its first mobile banking app, Co-Pesa. It's great to have you join us. I'm Ladi Williams. Let's go to a quick check on what's playing out with the markets that we track now. We're seeing gold prices have climbed to a one-week high today. As U.S. military action in Venezuela that's boosted the metals safe haven appeal. We see spot gold there. That's 0.23%, $4,461. I guess the rallies we're seeing from 2025 continuing into 2026. Spot silver, $77.58 per ounce, 1.1%, a big jump there. But on the flip side, we see palladium, that's down 0.26%. Copper having a pullback there, even though it was trading earlier in the day at about $6 there. But that's $5.95 right there for copper. Platinum, just a marginal rise there, $2,290 per ounce. So that's a picture right there in the metals market. And we see for oil markets there, we see the prices edge higher in European trading there, 0.29% up, $61.94 a barrel. That's for Brent crude, and 58.45 for WTI. And we'll see, markets there, investors, trying to digest what's played out so far in Venezuela with President Nicolas Maduro. So we're seeing the oil market still reacting. Traders are weighing, what's played out so far to see the impact right there on the oil markets. All right, so the stories right now. We see in Kenya, they've opened their sugar. Market to duty-free imports after ending a 24-year protection regime. A move aimed at, boosting the supply and stabilizing prices as local production still falls short of demand. The expiry of the COMESA safeguard allows cheaper sugar from regional partners to enter freely, a shift from protectionism to competitiveness that officials say reflects confidence in the industry's progress. Analysts say the change could, ease costs for consumers while reshaping the domestic sugar sector. In North Africa, Egypt is taking a significant step in regional energy cooperation, signing two memorandum of understanding with Syria to supply natural gas for power generation and help meet its petroleum product needs. The agreements inked in Cairo paved the way for gas deliveries via regasification ships or pipeline networks as Damascus seeks to rebuild its energy sector after years of conflict. Others are saying that the move could strengthen Egypt's role as a regional energy partner. And we see Zimbabwe's government, they've waived customs duties on a range of key imports in a bid to stimulate economic activity in critical sectors, including transport, mining, and tourism. New regulations that took effect January 1st aim to lower operational costs for public service buses, mining inputs, and vehicle assembly kits, among others, as authorities look to boost investment and ease pressures on local industries. This analyst is saying the move could help support growth and competitiveness across the economy. And Pillarcraft Cloud Solutions, they've been accredited as a system integrator for Nigeria's e-invoicing framework following approval by the Nigeria Revenue Service and NIDA. The company also launched Usawa Connect, a middleware platform designed to link businesses' accounting and ERP systems directly to the NRS e-invoicing platform, ensuring invoices are securely transmitted, validated, and compliant. Experts say this development could streamline tax compliance for businesses while supporting Nigeria's growing digital economy. And now to our first conversation. Palm oil remains a cornerstone of Nigeria's food and industrial sectors, using everything from cooking to detergents and chocolate. While global prices have recently dipped, domestic prices remain high, raising questions about impact on local producers, corporate earnings, and consumers' costs. Joining me for this conversation is Rosemary Ahira, an analyst with financial derivatives company Hello, Rosemary. Happy New Year. Great to have you. Talk to me about what's playing out so far. How will the current drop in global palm oil prices affect Nigerian producers like, Como oil palm, Fresco, as well as the overall agricultural output in Q1 2026?
So, global palm oil prices actually fell below 4,000 ringgit last Friday. So usually when we see popular commodities like this, the price falling in the global markets, we always expect that the price should also fall in the domestic markets as well. But for palm oil, that is not the case. Because if we look at the numbers, in 2024, Nigeria produced about 1.5 million tons of palm oil, but we consumed about 2 million tons. So there is a deficit of 25%, which means we produce about 75% of what we consume. So typically, what affects the price of palm oil are domestic factors. Things like the supply deficit that I just mentioned now, weak processing capacity, and also high cost of input, low investments, and the like. So we may not really enjoy this reduction in consumers may not really enjoy the reduction in global prices because it is primarily influenced by domestic factors. So considering corporate giants like Okomu Oil and Presco, their corporate earnings for the first quarter of 2026, it should remain relatively resilient because for one, Nigeria places a high price premium on palm oil. I think a ton of palm oil is about 2.47 million naira per ton. And if you convert the 4,000 ringgit or the $980 per ton that is sold in the global market to naira is about 1.45. So they are, if you are selling in the domestic market as a producer, you should make about 1 million naira extra per ton. So there is a high price premium in the domestic market. There is also, they also have an integrated farm that kind of helps them to reduce cost. So in the short term, it should remain relatively resilient. But their profit margins may face moderate pressure, especially if global prices continue to remain weak. So in essence, their profit growth may slow down, but their profitability in itself should remain strong.
Can government initiatives and, large-scale investment help, leverage, global supply shifts to reduce import dependence and maybe ease domestic food inflation?
Oh, yes, of course, because to a large extent, palm oil production in Nigeria is still on the subsistence level, so large investment, and I strongly believe in Keynesian economics. So there's a theory or a principle in Keynesian economics that says that the government should be the biggest spender in an economy or in a sector that is not really doing well, so they can be able to improve output and also attract investors as output is growing. So for this market especially, there has been a lot of investment, especially last year, because of how attractive it is. It's actually worth about 3 billion naira. That's the palm oil market in itself. So last year, in July of last year, the federal government actually created a national palm oil traceability system, which helps to improve the quality of output and also help support exports. And our president, Bola Ahmed Tinubu, actually supported an initiative to help plant over 100 million trees across palm oil trees or palm trees across the federation, so that we can be able to scale up our production as well. And even the CBN back in 2020, they offered about 34.4 billion billion naira into this initiative. And as of 2025, we were able to create over 100,000 trees. So we are seeing how far this large investment by the government can help to strengthen this market and also to attract investors. So with this, we'll be able to cut down our import dependence. We'll be able to kind of shrink the gap between domestic prices and global prices as well, so we can enjoy more of the benefits and also reduce food inflation, because producers of processed foods and detergents and the like use this commodity in their production, so it will be able to bring down food inflation and also reduce the pressure on household incomes.
Thank you so much, Rosemary. We'll keep tracking these prices and see how they play out in 2026. Thank you.
Thank you for having me.
All right, I'll take a break now. When we come back, we'll head straight to the markets. That's to the moment. Do stay with us. All right, let's head straight to the markets now. Definitely, we see the first full trading week of 2026. Not looking bad. Right there, we see Nigeria's stock market. That's in positive territory. The ASI up by 1.24%, 161,000, a new level at this point as gains, dominated trading. We see market breadth with trading of 56 stocks advancing and just 4, declining. Top performers include, QTix, Royal Exchange, both up 10%, Lockside, NGX Group, FTN Cocoa, and Ila Lakes, each posting, significant gains. All sectors are in the green that we track, led by banking, insurance, and industrial goods. So that's a picture right there on the NGX already, intraday, 1.24%. Johannesburg Stock Exchange now left out, 0.90% up, 117,636 points. So we're seeing these markets, kicking off this year strong. Let's get a picture of North Africa now. Sit for the EGX 30, also in the green, 0.93%, 41,056 points. And the Nairobi Stock Exchange, including Monday, closing Monday, 0.81% up. And if we look at the Gulf region now, we're seeing mixed performance with Dubai's DFM. They're rising 0.30%. Dubai Index, 0.68%, up 6,172 points. Other markets we tracked there, the Tadawul, that slipped some points there. The Qatari index, that's up about 0.11% right there. And we're still seeing, geopolitical issues there alongside global oil market trends, pushing sentiment right there in the Middle Eastern markets. We'll get a check now on the U.S. stock futures. They're mostly flat as investors, they're taking a breather following Monday's rally, triggered by the capture of Venezuelan President Nicolas Maduro. Dow futures there, 0.20% down. S&P futures, marginal decline there, 6,938 points. And the tech-heavy NASDAQ, just 1 basis point down there for the futures market, 25,576 points there. So, yeah, energy stocks led the gains in the U.S. markets yesterday with Chevron, ExxonMobil posting strong rises, as President Trump encouraged American oil companies to invest in, Venezuela's oil sector. Let's get a check on Asia markets now. We're seeing Asia markets, they kicked off trading, with gains as global equities extended a strong start. Now we see it's a big, over 1% gains there for the Nikkei, Kospi, and Hang Seng index. To flip over to the Nifty 50, that's the lone laggard there to close 26,158 points, 0.36% down. Well, let's take it on to Europe now. Let's get a check on what's playing out in Europe. Great to have you, Lars, and definitely a Happy New Year to you. What's the color? What do we see right there with trading in Europe?
And yeah, it is a new year, but apparently investors are in pretty much the same mood as in the old year. Of course, Ladi, you might remember months of sideways trading, and at least in early trading this morning, it looked like exactly that. We've seen this defense-led gains yesterday, and then, of course, in the morning right away, we saw a bit of profit taking with some of the markets flat, some of them down right away. Now they rallied up a little bit. So we are getting the indices back up in the green. We did get some numbers out of the service sector here in Germany today. Those numbers showing weakness. That is bad, especially since many economists are saying that Germany will have to build up its service sector as manufacturing faces more global competition. Anyway, I don't see this being a major factor in today's trading.
All right, so other matters now, despite the German economy struggling to get out of its weakness of several years. Wealth is up according to a new data there. What can you tell us about, these developments?
Yes, Ladi, indeed. It might sound a bit surprising. We've seen 3 years of an economy between recession and stagnation. We've hardly ever seen any growth, and yet wealth is up. And the headline number is something to behold. Germans have a private wealth of more than 10 trillion euros. Now, if you want to write that down, that's a 1 followed by 13 zeros, the private wealth held by German households. It has grown steadily for years, even in challenging times. In this past year, it's grown by around 6%. But now, if you wonder why, we are dealing with a very German phenomenon. Germans are very fiscally conservative. They put a lot of money aside. Their savings rate stands at 10.3%, which means for every 100 euros they have, they put just over 10 euros into their savings account. That is more than other countries. But as great as that sounds, it is not all that positive, because many Germans apparently park their money in savings accounts with very little interest. So while a lot of money accumulates there, it doesn't grow. And that is very different in some other countries, like if you look at the United States, for example, where a lot more money is actively invested. And while that is more risky, it also, of course, allows for a lot more growth.
Yeah, I guess some don't want to lose their savings, at this point. But I guess put it to work, in 2026. But how evenly is the wealth spread in Germany?
Well, Ladi, similar to other leading economies, financial inequality is, of course, on the rise here as well. Half of all the wealth held by German households is with the top 10% of the population, the richest 10%, so to speak. And their wealth is also growing much faster because they are, of course, not having much money in these low interest accounts. They are actually the ones investing in stock markets. And 2025 has been the third year in a row with pretty strong market gains. So they benefited handsomely. At the bottom of the list, however, you find 20 million households, pretty much the lower half of German households, financially speaking, that hold only 8% of the entire wealth. And among these people, of course, are many that can't save a lot, as they simply don't have a lot to begin with.
All right, I guess the same picture, the rich getting richer at this point. Thank you so much, Lars Holter. Thank you.
Thank you, Ladi.
Well, let's get a check on what's playing out in the crypto market now. See, Bitcoin there recovering, some gains to start off from this year, $93,815. It did touch $94,000 at some point, 1.06%. But we see XRP there, deep green, about 11.6% rise there, $2.37. We're seeing a lot of talk there coming from the leaders then with XRP. I'm talking about purchases of some of the XRP tokens, and we're seeing XLM following XRP. So it's majorly green on the screen. Let's look at some top headlines now. See, BlackRock clients have acquired 3,948 Bitcoins, valued at approximately $372 million today. And that's according to data out right there. The data shows that, these, clients, they're accumulating, Bitcoin at this time, with one of the biggest investment houses right there. That's BlackRock. We're also seeing a global network of Bitcoin ATMs that expanded steadily throughout 2025, signaling demand for physical on-ramp into cryptocurrency, despite, market volatility there. But let's bring in Olumide Adesina, our financial market analyst, to bring us up to speed. Hello, Olumide.
Yeah.
Happy New Year, Olumide. Great to have you. So we're seeing, BlackRock clients there acquiring about 3,948 Bitcoin, valued at $372 million. So we know the story from 2025, the likes of Strategy and some other big institutional investors, acquiring Bitcoin. Is that the trend we're seeing in 2025? What are you seeing so far for price action of Bitcoin?
I think when you look at the chart historically, 2025 wasn't so good for Bitcoin, despite hitting its all-time high. It settled below 90,000 at the last trading session of the year. But looking at January, we're seeing strong positivity, primarily from Bitcoin. And bookmakers are betting that the event in Venezuela will put in 60 billion worth of Bitcoin under lock. You recall that President Trump ordered the arrest of Maduro, and that pretty much has changed the dynamics in the Latin American country, which is the world's largest producer of, has the world's largest reserves for crude oil. And, Ladi, because of the sanction, that country used to use Bitcoin for transactions. So the dynamics is, the bet is that that will give Bitcoin some form of demand, because you're going to see less Bitcoin out there since Venezuela is reported to have about 60 billion. Then BlackRock traditional investor, trickling in millions of dollars into that ETF, unsurprisingly putting Bitcoin back above the 92,000 support. But, it's very early in the year. Geopolitical uncertainty remains elevated. This is the time when investment portfolio managers, banks reposition. So it's really very tricky, Ladi, to put in a bet on where Bitcoin direction will be. But we're looking at last year and this year, it's safe to say that there's really going to be a lot of consolidation and market correction this year, primarily because we are seeing the US Fed still backing on not being aggressive with rate cuts. We're seeing the fact that uncertainty around major economies, we're seeing inflation being peaky, deflation in China. All these concerns really play in the crypto market, despite the fact that it's looking green today.
From what we've seen so far, it seems Latin America, it seems to have a thing, for Bitcoin and cryptocurrencies. So would you say, what's playing out there is bullish for Bitcoin?
Yeah, primarily because we don't really know if it's true that Venezuela has $60 billion worth of Bitcoin stashed. These are reports, that have not yet been validated. But we understand that the dynamics is that if the new person in Colombia dances to the whims of Donald Trump, probably there might not be need to stash in Bitcoin. But the positive thing about Bitcoin holdings in that area is that it has brought in adoption. Don't forget that the country that has the highest adoption in the world is El Salvador, and it's a central Latin American country with strong exposure, which has brought a lot of light to that country. So yeah, it brings positivity, but the volatility that comes with that asset class makes it very unreliable for traditional finance.
All right, so what are you seeing for stable coins in 2026?
Well, I think with the IPOs coming in the world's largest economy, like Seku, we're seeing Tita also repositioning, getting some infusion and diversifying. I think it's more going to be who takes the larger pie, because the banks also are really fighting stablecoin issues, particularly the fact that they don't want them to have bank charter in the world's largest economy. I think we're going to have fragments. We're seeing what's happening in Europe already. USDT is not playing the tough because they don't have the Mecca license, so it's Seku that controls that place. Tita controls Africa, Asia. So I think, Gladly, we're going to have more of regional powers trying to consolidate, and we're going to see interesting products, particularly Ripple's RUSD. I expect expansion in that. PwC recently gave an upgrade on the Ripple giant infrastructure, saying that they really have a stay in traditional finance for the long term. So it's going to be interesting innovations this year for stablecoin study.
All right, definitely we're here for it, tracking all the developments right there in the crypto space. Thank you so much, Olumide Adesina. Thank you.
Thank you for having me. Yeah.
All right, so that's our major markets to track are looking today. You know, definitely the first full trading week of 2026, and we're already seeing the action so far with some of the big movers from 2025 signaling bigger moves in 2026. That's the show today. Thanks for watching. I'm Ladi Williams. I'm here on the team right here at Channels HQ. It's bye for now.